Hello, everyone. Welcome to week 8. Today we are going to be talking about taxes. In Mexico, tax matters play a fundamental role in the country's economics and financial landscape. Both individuals and business are subject to various tax regulations and obligations, and understanding the basic aspects of tax matters is crucial to comply with tax laws and ensure financial well-being. So let's get started. In Mexico, the Federal Taxpayers Registry, what we call Registro Federal de Contribuyentes, or RFC, is a unique identification system used by individuals and entities engaged in economic activities. It is a crucial requirement for any taxpayer who conducts business transactions, earns income, or participates in the country's economy. This RFC serves as a key identifier for tax authorities to monitor and track taxpayers' financial activities, ensuring compliance with the tax regulations and facilitating tax administration. The RFC or RFC is composed of 13 alphanumeric characters with specific components that convey important information about the taxpayer. So the first 4 characters usually represent the taxpayer's name or business name, followed by their date of birth or incorporation. Additional characters indicate the taxpayer's tax obligation, such as whether they are an individual or a company or a foreign entity. Registering for an RFS or RFC is a mandatory process for individuals and business alike, and it must be completed before engaging into any economic activity. In order to obtain an RFC or RFC, individuals must provide identification documents, proof of address, and other relevant information to the Mexican Tax Administration Service, Servicio de Administración Tributaria, SAT, and the RFC plays a vital role in various financial and legal transactions in Mexico. It is required for opening a bank account or signing a contract or issuing invoices and conducting other business-related activities. But moreover, it is essential for filing tax returns, making tax payments, and accessing to government benefits or services. So maintaining an accurate and up-to-date information in the RFC is crucial to ensure smooth tax compliance and avoid any penalties or legal issues. Changes in personal or business circumstances, such as name changes, address update, or modification to tax obligation, must be promptly reported to the SAT to keep the RFC information current. In Mexico, taxes for salaried workers and self-employed professionals play a significant role in the country's tax system. Both categories of taxpayers are subject to different tax regulations and obligations. So let's see the key aspects for tax salaried worker and self-employed professionals. In the first place, salaried workers in Mexico are individuals who receive a fixed salary or a wage from an employer for their services. So these employees are subject to the income tax law and the Social Security law. The employer is responsible for withholding income tax from the employee's salary and making Social Security contributions on their behalf. Salaries workers' income tax is withheld by the employer based on a progressive tax rate, which means the tax rate increases as the income level rises. And the withholding of the tax takes into account various deductions, exceptions, and credits available for salaried employees. Social security, all the salary workers are entitled to social security benefits. This will include health insurance and retirement pension. The employer and the employee contribute to the social security system, with the employer deducting the employees a portion from their salary. On the other hand, the self-employed professionals are going to be individuals who work for themselves and provide services or engage in economic activities independently. They are responsible for reporting their income, calculating their very own taxes, and making tax payments directly to the tax authorities. So these self-employed professionals must file an annual tax return and calculate their income tax liability based on their total income and allowable deductions. And they are also responsible for making provisional tax payment through the year to avoid penalties and underpayments. And if the self-employed professional provides goods or services subject to the VAT, the value-add tax, they must charge and collect the tax from their clients and customers. They are required to report and pay the collected VAT to the tax authorities. Additionally, the self-employed professionals may have other tax obligations, such as local taxes, depending on the nature of their business or profession. Either way, both salaried workers or self-employed professionals are required to comply with tax obligations, keep proper financial records, and meet tax deadlines. The failure to meet tax obligations may result in penalties or legal consequences. The income tax, what we call Impuesto sobre la Renta, or ISR, is a fundamental component of Mexico's tax system. It is a direct tax imposed on the income earned by the individuals and legal entities within the country. And understanding how ISR works is crucial for taxpayers in Mexico. So let's see some key aspects of income tax, ISR. In Mexico, individuals and business are required to determine their taxable income, which includes all sources of income, such as salaries, business profits, rental income, capital gains, even dividends. And certain deductions and exceptions are allowed to arrive at the taxable income. The income tax in Mexico follows a progressive tax rate system, which means that as a taxpayer income increase, they are subject to a higher tax rate. The tax rate changed from 1.92% to 35%, depending on the taxpayer's income level. Taxpayers in Mexico are eligible to claim various deductions to reduce their taxable income. Common deductions are going to include mortgage interest, real mortgage interest, medical expenses, education expenses, charitable donations, and contributions to retirement accounts. Individual taxpayers in Mexico are required to file their annual income tax returns by April 13th of the following year. And the legal entities have different filing deadlines based on their tax year. The tax payment is due at the time of filing the tax return. In certain cases, income tax is withheld at the source by employers, financial institutions, or other entities before the payment is made to the taxpayer. And this withholding tax is then remitted to the tax authorities on behalf of the taxpayer. Taxpayers in Mexico can claim tax credit for specific expenses or investment. These credits directly deduce the amount of tax owed. For example, there are credits available for certain types of energy efficient expenses or investments in research and development. Also, individuals and legal entities in Mexico have the responsibility to comply with their tax filing obligations accurately and timely, and non-compliance may lead to penalties, fines, and audits by the tax authorities. So income tax is a critical source also of revenues for the Mexican government, enabling it to fund the public services, infrastructure projects, and also social programs. Now I'm going to explain the value add tax, impuesto al valor agregado, or VAT or IVA. This is a consumption tax that is applied to the sale of goods, the provision of services, and the import of goods in Mexico. And it is an indirect tax level at each stage of the production and distribution chain, ultimately borne by the final consumer. Some of the key aspects of this value-added tax, VAT or IVA, impuesto al valor agregado in Mexico, are the following. The standard VAT rate in Mexico is 16%. However, certain border regions enjoy a reduced rate of 8%, known as the border region tax, impuesto sobre la renta fronterizo, or IVA fronterizo, aimed at stimulating economic activity in these different areas. Most goods and services in Mexico are subject to VAT or IVA. This includes items such as food, clothing, electronics, professional services, transportation services, and more. However, some specific goods and services are exempt from the VAT or IVA, such as basic foodstuffs, educational services, and healthcare services. Businesses that are subject to VAT can claim input VAT credits, IVA creditable, for the VAT they paid on purchases and expenses related to their business operation, and they can offset this credit against the VAT they collect from the customers, reducing the overall tax liability. In certain circumstances, businesses are required to withhold VAT from payments made to suppliers. This withholding is considered an advance payment of the VAT and is credited to the supplier's tax account. Business subject to VAT must file monthly VAT returns and remit the tax to the tax authorities within a specific time frame. Failure to comply with this filing and payment obligation can result in penalties and fines. Export goods are generally zero rated, meaning that the VAT rate is going to be 0%. On the other hand, imports are subject to the VAT at the standard rate when the goods enter the country. And a small business with non-revenues below a certain threshold may qualify for the simplified VAT regime. This value-add tax plays a significant role in Mexico's tax system, contributing a substantial portion of the country's tax revenue. In Mexico, also, individuals and business are required to file an annual tax return known as Declaración Anual. This process is a crucial aspect of the country tax system, and it applies to various types of taxpayers, including employees, self-employed professionals, and also companies. The key points related to the annual tax return are the following. Most taxpayers in Mexico are required to submit an annual tax return to the tax authorities. Individuals with a certain income threshold, business owners and corporations fall under this obligation. The filing deadline is generally set at March 37th of the following year, and it covers the previous calendar year's income and deduction. Taxpayers should file the annual tax return. Individuals and business must have a valid tax identification number that we call Registro Federal de Contribuyentes, and the taxpayers must report all sources of income received during the tax year. This is going to include salary, professional fees, business income, capital gains, interest, dividends, and other forms of income. Employers and financial institutions provide individuals with the necessary documentation, such as the CFDI, Comprobante Fiscal Digital de Internet, to facilitate accurate income reporting. The taxpayers are allowed to deduct certain expenses and claim tax credits to reduce the taxable income, just like we said. Common deductions are going to include medical expenses, educational expenses, real mortgage interest, and donations. And tax credits can include credit for education, health, and support for dependents, among other things. The annual tax return must be filled electronically through the tax authority online program known as Sistema de Declaración Anual. The electronic system simplifies the filing process and ensures accurate and timely submission of tax returns. And after submitting the annual tax return, taxpayers may be eligible for a tax refund if they have overpaid their taxes during the year. On the other hand, if the tax liability exceeds the amount withheld or paid during the year, they must make the necessary payment to the tax authorities. Failing to file the annual tax return on time or providing false or incomplete information may result in penalties and fines imposed by the tax authorities. The annual tax return is an essential responsibility for individuals and business in Mexico. It allows the tax authorities to assess the taxpayer's income, deduction, and credits accurately, ensuring the correct calculation of taxes owed or refunds due. So with that information, I finished that topic for taxes. Hope you enjoy it. See you next week. Bye.